Good afternoon, everybody, or evening, depending where you are, or morning, whatever it is, good, whatever. This is the weekly kickoff for the Forex Trading Room on January 20th of 2019, where we look at the week that just ended and the week ahead. And with that said, I'm going to jump right into the agenda. As usual, we will be looking at the prior week, the currency strength meter, the fundamental announcements that we have coming up, the analysis of the major pairs on the daily charts, any setups we see in progress, and a few concluding words. We'll start out with the long-term ledger. There hasn't been a lot of changes. We are in several long-term trades. Some of these have hit their either adjusted stop loss or stop loss and taken us out. The remainder are holding steady. We had a pretty dismal week on paper. Basically, the pound got stronger despite what should have been a complete crash. But towards the end of the week, we saw the pound moving in the expected direction again. So all those trades started coming back, assuming we had not been exited out, which did happen in a few cases. We did have one profit taker with the Euro New Zealand, and we did open a few trades as well when the turnaround started, as well as placing pending orders on some of the likelier movements, one of which actually triggered right before we started this session. So we did get entered short into the pound Swiss earlier this afternoon on the market open when it did hit the pending orders trigger. So that will be updated in our next email that goes out, but that is the long-term ledger as it stands right now. Moving into the short term, we did not have any trades this week. In fact, we haven't had any short-term trades since the very end of last year. The market has just not been conducive to my style of trading when it comes to short-term. That doesn't mean there haven't been any short-term opportunities out there, but we all have different styles. And in my case, I decided to sit the short-term trades out for the duration. We'll be coming back to them, but I'm not sure when. It'll be when the market tells me that my systems will be working adequately in a short-term scenario. Notes and opportunities for improvement. As I mentioned, there's been no trading on the short-term account due to market conditions. We do have several long-term plays in motion. Brexit is still going to be the flavor of the week. Theresa May had a very, poor couple of weeks with the different votes in Parliament, a challenge to her authority and whatnot. The plan that Theresa May had already agreed upon with the EU was scrapped. Parliament did not approve it, which sends them back to the drawing board. There is the expectation that Theresa will put together a new Brexit plan between now and January 29th, which is the next scheduled vote in Parliament for any Brexit deals. So that's what's coming up. Obviously, it won't happen this week. It will be early next week, but there is an expected speech by Theresa May tomorrow. Actually today in the UK, so Monday in the UK, there is a speech coming out of 10 Downing Street, the residence of the Prime Minister, and we'll see what that brings to table in the market. For now, keep a close eye on everything related to Brexit and hang in there. And already said, but let's repeat it, there are no trades open in the short-term account. We're all cash right now. Looking at our relative strength meter for this week that just ended, as well as the past 30 days, we've switched around how we're looking at the strength meter, just part of our normal improvement in tweaking. So I'm no longer looking at the week immediately prior to the last one. I'm looking at the last 30 days combined. So the last 30 days have seen a volatility a little bit below 5%, which is actually decreasing. It was up to 7% when we looked at the figures last week. So we have that monthly volatility going down at the same time as weekly volatility is slightly up. It was 1.5 last week. It is now 1.98, close to 2%. So the weekly volatility rising, 30-day volatility decreasing. Let's take a look at some of the key currencies here. We see that the Aussie had a reasonably decent week against everybody except the CAD, the pound, and the USD. And even in those cases, the decrease wasn't a whole lot. This one is color shaded, so the deeper the color, the more the movement. We can see that it gained a lot against multiple currencies and only lost a little bit against the three that I mentioned, CAD, pound, dollar. So that's the Aussie. The CAD was the clear winner for the week. It gained strength against everybody else. The Swiss pretty much lost strength and lost heavily against the CAD, the pound, and the dollar. The euro was a little bit more middle of the pack, won some, lost some. The pound was another clear winner. Again, the pound moving into strength despite everything that's going on in the Brexit scenario. And the reason the pound got stronger, at least the reason I've been able to determine, is that Theresa May's plan, having been voted down in Parliament, actually opens the door to Brexit being undone altogether, for the UK to step up to the EU and say, hey, sorry, we goofed, we made a mistake, we're not going to do Brexit anymore, and let's just go back to the way things were. That will probably require a new referendum. There's sure to be a lot of chaos surrounding that if they do try to do it. And at the earliest, it's looking like maybe a year out before they can actually do another referendum on Brexit, just based on the logistics of everything. So this is just the story that keeps on giving. There will either be a very hard Brexit come March if nothing else is done, or there will be a kicking of the can further down the road to deal with perhaps a year later. So the jury's out, but that was what breathed a little bit of strength back into the pound. The yen was the clear loser. It did depreciate against every other currency out there. The Kiwi lost ground heavily against a few currencies and only gained slightly against the yen and the Swiss. The dollar was a clear winner for the week against everybody except the CAD and the pound. And even in those cases, the movement was very slight. You can see that the CAD and the pound are not even color shaded here. They're basically white, which means that the movement was very small compared to where the dollar gained, which was everybody else. Silver, the clear loser, lost heavily against everything else. And gold was pretty much middle of the pack, gaining against some, losing against others. So that's where we are as the week ends. And moving on to the calendar of fundamental announcements for the week, we've got a few interesting ones, or at least a few that I most definitely will trade live. And those would be, let's take a look from the top. We're going to be starting on Tuesday, the 22nd, where we have average earnings coming out of the UK. We have the CPI quarter over quarter coming out of New Zealand. More importantly, and this one would be the tradable one, we have the monthly interest rate decision coming out of Japan. That will be happening, and knock on wood here, because the Japanese have been notoriously late the last few months, putting this out on the timetable that they had originally agreed to, but it is set for 9 p.m. Eastern time, the Bank of Japan monetary policy statement and interest rate decision. We will likely on Tuesday, and I'll confirm this on the email that goes out, but we will likely be having a later 8 p.m. session, either start the 8 p.m. session around 8:30, and see if we can dovetail into the announcement, assuming it even comes out at the scheduled time. So I'll confirm that via email sometime between now and tomorrow. On Wednesday, we have retail sales out of Canada, employment changes out of Australia, and that's about it. The Aussie ones dovetail nicely with our 8 p.m. session, so we can say that at the end of the 8 p.m. session, we will hang tight for a few minutes and see if there's any movement out of the Aussie pairs thanks to this announcement. So while I won't schedule it as an announcement or a tradable one, we'll simply hang out on Wednesday after the normal 8 p.m. session and see if there's anything to be had there. And then we come to the more important one on Thursday, the 24th at 7:45 a.m. Eastern Time. We have the European Central Bank interest rate decision. That is definitely one that I would like to trade. So we will be opening the trading room at around 7:15 Eastern Time to trade that that interest rate decision, as well as very likely we will hang out an extra 45 minutes after the announcement and wait for that policy statement and press conference scheduled for 8:30. Last but not least, we have on that same Thursday in the evening, we have the Tokyo CPI excluding fresh food year over year. Not going to trade that one, but just bear in mind it is on the calendar. So I will be trading the Bank of Japan interest rate decision on Tuesday. We'll hang out for the Australian employment numbers Wednesday evening after the regular 8 p.m. session. And we will also be trading the European Central Bank interest rate decision and press conference, on the morning of the 24th. And with that being said, we'll jump into our pairs, our charts, daily charts. So we're looking at the euro dollar. We are short on the euro dollar long-term trade, and it did go significantly against us for about a week here, where you see it actually breaking above the Ichimoku cloud on the daily. We hang on to that trade. Our stop loss was significantly above that level, and it has now started coming back almost to the point of break even, and it is going through the cloud yet again. If we see a continuation this week, this should take that trade into a nice level of profit. It has several levels, support levels below it that we need it not just to hit, but to break to give us the ultimate profit on that trade. But for now, it looks like that one is definitely coming back to us. Pound dollar, and we are in a long-term trade on the pound dollar as well. Somewhat underwater, not by a whole lot. You can see that the pound did gain a lot of strength over the past week, actually broke out of the Ichimoku cloud as well, hit the resistance on this trend line right above the cloud, and on Friday, it gave back a little bit more than half of what it had actually done throughout the week. So it was a really nice retracement on Friday. And well, we're hoping it will continue and that it goes through the Ichimoku cloud. And again, our profit level is somewhere here near the bottom. So that's another one that we're holding on. And of course, this one is significantly vulnerable to anything coming out of Brexit, out of 10 Downing Street, out of it, all this entire situation between the EU and the UK. So this is not a given. The fact that it has obeyed technicals and found that resistance at the cloud and at the trend line bounce back, that should be taken with a grain of salt. The technicals here are taking a back seat as the fundamentals drive this market. So cooler heads have prevailed, and it looks like the pound weakened significantly on Friday. And here's hoping that it will continue to do so throughout the week and bring us back in line as well as into profit on that trade. As I said, it's not significantly underwater now, but it is carrying a little bit less than 100 pips last time I checked negative on this one trade. USDJPY, and this one actually was a closed trade from about a week back. So we gave up 50 pips on this pair as it went, the piercing of that level of support there failed, and it is starting to go up. So we're waiting for better opportunity on the USDJPY. It looks like on Friday as well, it did a little bit of a turnaround, but it is still hanging out at those very high levels. For anybody following Fibonacci's and that sort of stuff, this is at least a 32.8 retracement on the Fibonacci. So let's see if that fulfills and it starts going back towards the bottom. But again, this will be strongly driven by fundamentals more than any technicals at this point. But keep an eye on it. I'm not in any rush to re-enter this trade, but if I see a good opportunity, I most certainly will. USD CAD, we've been carrying a short on the USD CAD for a while now, expecting it to cross that Ichimoku cloud and hit any of these support levels that I have indicated towards the bottom of the chart. Long-term trade, no rush. We'll continue to hold this one so long as it hangs out in that general area. Right now, that trade is pretty much at break even. It's not carrying that much of a negative, and it has been flat for most of the last week. So it's just been hanging out sideways, and we're still waiting for it to show some sort of decisiveness and either bounce off that cloud and take us out, or fulfill and cross the cloud and give us a good run towards the bottom. Regarding the CAD, the key thing regarding the CAD is oil prices, which have been recovering quite nicely since the beginning of the year. Friday, WTI closed at around 53. The low from last year was somewhere in the mid to low 40s, either 43 or 46, can't remember quite well. But either way, we're looking at about a $10 gain. No matter which number is correct, we're looking about a $10 gain since the very lows from last year, and that, of course, has helped the CAD recover, not just against the dollar, but pretty much against every other currency. Oil continues to do better, yet the CAD has stalled. So if oil continues to rise this week, I would expect it to catch up to the USD CAD as well as the other CAD pairs, and that will fulfill this trade. So again, long term, we're looking at both fundamentals and technicals, and we do have to give the different trades time to evolve and to either prove us right or prove us wrong. USD Swiss, also a long-term trade. We were following this trend line towards the bottom that you can see here on your screen. Of course, it has broken out. We do have our stop loss above this Ichimoku cloud, which has so far been acting nicely as resistance to that trade. So we'll see what comes of it. As I like to say, I don't expect every single trade to make money. Some of them are going to be losers. The question is having enough winners and allowing these to run their course so that it makes up for any interim losses, as well as, well, adds money to the account in the long run. But again, these need time. This one could be a loser, could be a winner. There is no way to know until it actually plays out. All we can do is follow the trends, follow the fundamentals, and try to do the best analysis we can. So we are short this one, expecting a retest of the trend line, as well as continuing to find resistance on that dropping Ichimoku cloud. So we'll see how this one plays out. Our stop loss is above the parity level, which has acted as a nice piece of resistance in and of itself. So it is above this line over here at the 1004 something. So about 10 pips above this level that's indicated here on the screen. So we'll wait for that to play out as well. Aussie dollar, I've been avoiding the Aussie for a while. It's just not been moving very well, but that may change again at the drop of a hat. But I'll wait for it to actually give me some indication. Right now on the Aussie dollar, it is following the underside of that Ichimoku cloud, acting as resistance, but moving very sideways. Hasn't really had a good breakout in quite a while. If we get a breakout towards the bottom, which would be the likelier scenario based on what I'm seeing, it would give us some really nice opportunities. But again, I want to see it moving before I jump into it. Kiwi dollar, we're already short on this one. Much like the euro dollar, it did go against us for a week or two and then did a nice turnaround. So that one is actually at a very small level of profit as we speak, the last time I checked it. So it's hanging out right below our entry on that Kiwi dollar short. And of course, I'm looking for for it to go through the cloud and continue heading towards a test of the lows. Again, long-term trades, I'm looking for hundreds of pips here, so have to be patient and wait for it to provide. Aussie CAD, another one that is probably going to be a good short, but it has been moving too sideways for my taste, and it has been trapped inside the Ichimoku cloud for quite a few weeks. So I'll wait for that to play out in either direction before I actually open a trade on this one. Euro Swiss moving very flat, not giving us a whole lot of opportunities. I think we did take a trade on the Euro Swiss with a very small portion. I think actually break even on a trade as it retraced in the last couple of weeks. But again, moving very sideways, not giving us a lot of opportunity. If I had to take a trade on this one, I was forced to take a trade, I would be shorting it, looking for that resistance in the Ichimoku cloud to hold and for it to do another test of the prior lows. But I just don't like the look of it yet. So it'll be something for the future. Euro pound, I've avoided this pair simply because both the euro and the pound are susceptible to Brexit. It has, though, well, the pound had a pretty good week, except for Friday. So we can see that we had a nice drop throughout the week. And on Friday, we had that significant retrace, about 30% back. It is now traveling underneath the Ichimoku cloud. But again, I'm in no rush to get into the euro pound. If I did, again, assuming that somebody forced me to, I would be going long on the euro pound right now, expecting the pound to weaken and go back towards the top of this range. But for now, I'm going to leave this one alone. Euro JPY has not given us any trigger. I've been waiting for this one to either bounce off that bottom channel wall and give us another ride towards the very bottom of the chart, or instead to break through and start giving us another trip inside the channel towards the top. It's been 2-3 weeks and it's done neither one, so all we can do is continue observing it and wait for it to give us some sort of entry signal. Euro CAD getting stronger as oil rises, so there's nothing that we didn't know in this chart. It is trying to do a cross of the Ichimoku cloud. This one is one I already have a pending order on, that if it breaks through the cloud, I get taken in on a short trying to ride it towards the bottom. So we'll wait and see what happens with that one. So far, it is moving decisively but slowly in our direction. Pound JPY, again, pound got stronger. We did get taken out on a trade in the pound JPY earlier in the week, so that was a loser, as it just dropped against the pound for no good reason at all, other than the market is not necessarily rational, so the market will do whatever it wants to do. However, knowing what we know, the more it rises, the more of a good opportunity it's going to give when we do have the turnaround and another trip towards the bottom. So this is another one that I'll likely put a pending order in to automatically take us in after it crosses one of these levels of support underneath where it is right now. So stay tuned for that one. But again, we have to wait. At this point, having already given back some pips, I'll need to wait for a good clear signal before I make another attempt. Aussie JPY, same thing here. It had been following a trend line and has now broken through. It is traveling significantly away from the Ichimoku cloud where it is right now. So the resistance is very, very far above. However, that cloud is dropping. I would expect at some point yen strength to come back to market. You can see that this is a sideways channel as well, that it had broken out and is now testing the underside. So if that test fails and we see a bounce, this is also going to be a good long-term short as we ride the yen down, or the Aussie weakness towards the bottom of this chart. Euro New Zealand, and we've taken several rides on the Euro New Zealand train, most of them at profit, and we continue doing so. We're in a trade right now, so you can see the little arrows there where we've shorted it in the past. Our current one is a little bit below break, well, actually above break even, so we're losing a little bit on this Euro New Zealand trade. Not a whole lot. It was opened late last week, after we had already exited a trade with about 150 pips profit on this pair. And that was already our third or fourth ride on the Euro New Zealand. So now we're in yet another trade, expecting it to continue traveling across the Ichimoku cloud. And ultimately, I would like it to do a test of the bottom. That is where I've been trading it towards all this time, but taking profit as it does its little retraces, so we maximize the potential of the trade. But for now, we are in this trade and trading it, as I said, down yet again. Pound Canadian, very sideways. Obviously, with improving oil prices, the CAD should start doing better than the pound. We did see that pound strength come into most of the week, then the failure on Friday. But in this case, that failure on Friday pretty much wiped out half the gains that the pound had made. So that's because not only did the pound weaken on Friday, but CAD is getting stronger based on oil prices. So this one has had a bit of a deeper movement than the other ones, but still a very sideways chart. I would wait for it to break this trend line that you can see rising and dissecting this across the middle. And the Ichimoku cloud is there in the same general area. I would wait for that for a play towards the bottom of the channel and perhaps even beyond if oil prices cooperate. So that's where that one is. And last but not least, the pound Swiss. As I said, we did get taken into a pound Swiss short about an hour ago, as it crossed our trigger line and re-entered that Ichimoku cloud. So we're looking at it to go back across the cloud and test those prior lows. That is a very nice distance. There's about 300 pips there to be had, just the width of the cloud. So obviously very dependent on what happens with Brexit and Theresa May and all that, but I did want to try to catch most of that recovery move if and when it happened, and I'm happy to take the risk on this pair. That is the extent of our charts for today. A little bit of a recap, the setups I see in progress. For the dollar, I don't see any change at this point. We're already in the longest government shutdown in the history of the United States, as President Trump continues his fight with Congress and the Democrats, really, not Congress in general, over the construction of the border wall with Mexico. Doesn't look like there's going to be any lifting of the shutdown anytime soon. Both sides have dug their heels in the sand and are not budging. For now, this isn't affecting day-to-day life for anybody that's not a government employee. And I'm sorry, I'm going to say something really mean, but I really hold no huge love for government employees. Half of them are parasites, and the other half are parasites in training. So the fact that these people are now enjoying a long vacation actually has improved the country for me somewhat, as dumb regulations and oversight have been removed. Again, proving that we really didn't need that to function as a country. But I don't want to mix politics here. Suffice it to say that personally, I'm happy with it. From a trading perspective, at some point, this will start impacting the dollar. It hasn't yet, mainly because we haven't felt any significant effect. But this is uncharted territory. It's the longest government shutdown in history by a fair margin. So exercise caution in all the dollar pairs as you trade, especially if you're trading short term. When you're trading long term, the systems are a lot more forgiving than when you're trading for short-term gains. The euro pairs, the euro still faces critical threats between Brexit, their banking sector, civil unrest in France and other countries, immigration issues. You don't see that as much in the news simply because we don't track European news as closely as we track American news. Shame on us for always looking inside and not outside. But there is a lot of unrest in Europe right now, and this, of course, will weigh on the euro on a critical week as they do release their interest rate numbers. So keep an eye on the euro, trade it carefully. It could go in either direction, but if you see a good opportunity, by all means, take it. The only way you never win money in the Forex market is if you never take the trades. Pound pairs, I'm not even going to change the title. There's going to be Brexit, Brexit, Brexit until we say that's done with. But in this case, and I already said it, Theresa May has survived another threat to her leadership, and she survived a no confidence vote, but is now scrambling to come up with a plan B after her Brexit deal got voted down in Parliament. And there is a new vote on whatever deal she comes up with a new vote scheduled for January 29th. So this week is we're basically going to be in a holding pattern, barring any speeches that come out of 10 Downing Street that may or may not move the market. And then next week, we go back into red alert as all these things go back to Parliament for actual votes that will move the market one way or another. Aussie, New Zealand, I've combined the two currencies because they're very closely correlated. These two currencies are starting to move very restlessly after a year of bearish action. So the entire 2018, both the Aussie and the Kiwi were just dropping towards the bottom and not finding a bottom. Indeed, they broke through several levels of support on the way down and just kept going. At some point, that has to end. It hasn't ended yet. We're still in that bearish period, which has lasted now more than a year. But I would expect that at some point, a true bottom is reached and we start getting that Aussie-New Zealand recovery. Indeed, that may already be happening based on the fact that the most recent lows haven't been tested in quite a while, but it is too soon to tell. So keep an eye on those pairs, trade them carefully, but like I said, trade them, otherwise you're not doing anything. And last but not least, the CAD pairs. Oil prices, as I said, have been steadily recovering since late last month. So late December was the very low on oil prices where it dropped into the mid to low 40s. And the Canadian dollar was just clobbered by this oil price drop. But oil prices have recovered by about $10 since then, and the Canadian dollar is starting to show that strength across several different pairs. So CAD trades are going to be nicely profitable, assuming that oil price continues to rise. Keep a close eye on oil price. You see it rising, you can continue going into CAD strength plays. If you see oil prices faltering or heading backwards, get out and get out quickly. So that's going to be it for me as regards the analysis and setups. Final words here. We are in a very long view frame of mind right now. Got to be patient, got to stick to that long view, got to stick to your analysis. If you believe in your analysis, take the trades. If you don't believe, you should not be trading. And January is a great month for that because we often see moves starting at the beginning of the year that play out for the next 12 months, sometimes even further. If anybody caught the Aussie and Kiwi weakness a year ago, that would have been the trades for the year. You could just written that thing down without even looking at it the entire year. Of course, coulda, woulda, shoulda. But those did start out in January, as did many other moves in the Forex market. So this is a key month to be looking at your charts, looking at your fundamentals, and placing some very key trades that are favoring whatever odds you see playing out in the market. Worst case scenario, you're wrong and you lost a few bucks. But when you're right, and if you leave these trades alone, they can really make your year for you. And remember, if a trade does exceed your appetite for risk, then pass on it. Don't take any trade that you're not comfortable with or that risks too much of your account, but do it knowingly. Just be aware that that is what you're doing. I've decided that risking $500 is too much right now, and I'm going to be passing on this trade. Don't bullshit yourselves. Those are my I guess my final words of wisdom there. Pardon the French. And that is everything for now. I'm going to open it up for any Q&A. So if anybody has any comments or questions, do feel free to chime in. Okay, in that case, then I thank you very much. We will have this recording up sometime later tonight, and of course, an email summary going out. And I look forward to seeing you guys tomorrow at 8 p.m. Eastern Time in my regular session, or in Callum's London Open at 3 a.m. Eastern Time. Tomorrow is a holiday. I should have led with that. Tomorrow is a holiday here in the U.S., and the markets will be slow as a result. By 8 p.m., however, when I start trading, that will be the Asian Open, so it shouldn't have any significant effects. Same goes with Callum's session. It's definitely not a holiday in the UK, or at least I don't think it is. and you should have the regular movement that the London Open brings. But bear in mind, for those of you trading in the U.S., that the markets are going to be slow to non-existent for the New York session. And last chance, anybody have anything? Okay, then I will talk to you guys later. Have a good one.